However, in the construction industry, things seem to be looking up. In the second quarter, the Afrimat Construction Index was 8.8% stronger than it was in the first quarter. This has 7 of the 10 indicators that make up the index turn positive during the period. On the downside, on a year-on-year basis, it still registered a decline of 1.9%. Earlier, I spoke to independent analyst Roelof Botha, who compiles the data, and started off by asking him whether he was surprised by the rebound, considering that it fell in the election quarter. Here's what he had to say.
It's a technical reason.
Okay.
And that's related to the fact that some of the 10 constituent indicators have not been seasonally adjusted. It's impossible to do it with all of them.
Okay.
So the second quarter is, as a rule, always better than the first quarter because, as many viewers know, in South Africa, the first quarter is a slow month. People are not back in the office on the 2nd of January. Some are not even back on the 2nd of February. So the second quarter is usually a little bit better, but the year-on-year picture is really a point of concern.
Okay, I'm going to go back to that, the year-on-year picture, but just one of the star performers there, because you say that typically the second quarter is better than the first quarter, but one of the star performers that performed well on a quarter-on-quarter basis and on a year-on-year basis is the value of wholesale sales of building materials. Talk to us about this momentum and the drivers behind it.
Yes, it's a little bit of a paradox because the wholesale trade sales for construction materials have been doing for quite a while considerably better, quarter-on-quarter and year-on-year, than the retail trade sales. So something tells me that there's some informal sector activity going around where they do get the wholesale materials, but it's not captured probably in the Stats SA data survey. I'm not saying it is like that, but that's a possibility. There is a very vibrant informal sector, construction sector in South Africa, as I think we all know, if you just travel long and far enough.
That's actually quite interesting that you say that the informal sector activity might actually not be captured in the Stats SA figures. Of course, we know that's where we get, for example, the hardware retail trade sales that actually this time have, done well quarter-on-quarter. We did see quarter-on-quarter growth there, but we know that, looking at the Stats SA figures, that has been subdued for a while. Would you say that even on that front, there's maybe a bottoming out there in that indicator?
Yes, it's possible. But I'd like to get back to the almost 2% year-on-year decline in real activity in this sector, which is so crucial for the drive for decent housing, especially for the low-income groups. I just want to remind viewers of the fact that we built 3 million houses, RDP houses as they were called, brick and mortar, decent houses, over a decade when Thabo Mbeki was president of this country. And after he was no longer there, state capture came into the equation and things just went haywire, especially with the infrastructure. And we really need to get to, to grips with this. The single most important obstacle facing this sector, the construction sector in South Africa, is the restrictive monetary policy of the South African Reserve Bank's Monetary Policy Committee. That is a thorn in the flesh.
Would you then, Roelof, expect better outcomes, considering the fact that we are going into looser monetary policy territory? Of course, we don't know by how much and by how far and how fast that will happen. Or do you think that maybe it will take a while for that to filter through to the construction index?
Yes, well spotted. We are certainly on the verge of less restrictive monetary policy. It seems as if the Monetary Policy Committee wants to wait to see what the US does. Maybe they think South Africa is like the US. I've got some news for them. It's not the same. We have a 30% plus unemployment rate. They have virtually no unemployment.
Yeah,
it's desperately needed. And I just want to remind the viewers, just before COVID, the prime rate was 10%. And inflation was around about 5%. So we had a real prime rate, prime minus CPI of 5%. Now, the prime rate is 11.75 and the CPI is 4.6. So now the prime rate is 7.1%. This is not very bright because we need growth. in South Africa. We need employment creation desperately. We don't need to drive inflation down to whatever ridiculously low level. We can live with a little bit of inflation, but consumers in South Africa are paying now 9.2% of their disposable incomes on the interest on their debt. This is the highest in 15 years. We desperately need some relief on the interest rate front.
Is that the only low-hanging fruit that you could look at, maybe that could boost the Afrimat Construction Index, at least in the short to medium term?
Well, no, certainly not. But I regard that as the most important one. Just as a point of interest, on the average bond administered by Better Bond, homeowners are now paying 4,000 Rand a month, every month more. This is money that could be spent in the economy. Yeah. But certainly there's more optimism. We expect a marginal increase in the third quarter because the effect of lower rates, which hopefully will be forthcoming in the next couple of weeks, will only be felt in the second quarter. We should have another rate decline in November, and they should actually both be 50 basis points. So the fourth quarter, we are, despite the fact that the last 2 weeks of the year is actually a no-go for construction, because of the sort of de facto holiday that kicks in on the 15th, 16th of December. But we expect a bumper fourth quarter if the MPC can just see the light and give us some interest rate relief, please.
That was independent analyst Roelof Botha.